Stephen, when you look at euro strength, euro weakness, I guess it's movable on three things. First of all, trade, whether the trade tensions and trade war starts hitting car makers, and that would hurt the German economy, on who becomes ECB president and what the Italians do with their budget law. Should we be more optimistic than we were 3 weeks ago?
Well, certainly the bank's written a lot about this. Clearly, Europe's a big focus for us. I would focus on the last of the topics you've just mentioned, Italy. Certainly, the view of our rate strategists is that a lot of bad news is already in the price as far as, let's say, BTP spreads to Germany is concerned. So you've already highlighted that the Italian government is probably not going to be as aggressive in flouting EU rules as we initially thought. So when we do get that budget on September 30, our view at the bank is that it's likely to be below 2% of GDP. So that's a pretty good outcome. Our view as a bank is that we should actually see BTP Bund spreads narrow on the back of that. It's interesting you mentioned the FX, what that means for the currency. We're actually more focused on Euro-Swiss here than Euro-Dollar because our FX strategy team has highlighted that Euro-Dollar is being driven much more by trade concerns. Euro-Swiss, much more driven by political concerns in Europe.
All right, I'm sure Tom is doing a Swissy chart as we speak. Where does Swissy go from here?
Well, we actually think, and the key view we've just published in our global outlook, is that the Swiss is likely to weaken from here. We actually think Euro-Swiss will move higher, and from our perspective, we think these type of opportunity or these type of levels could be attractive buying opportunities for Euro-Swiss.